Hello traders, this is Rich from Tradesight. This is what's going to wind up being a special report. This is going to be for the coming trading session of Wednesday, June 25th, 2014. Special report because as you're going to learn as we get into what's going on kind of underneath the hood here, there's actually some things happening. If you look at the top line here on the day, the NQ futures were flat, the Dow was down 87, the ES was down about 10 handles, but there's actually really a lot going on today, and we're gonna talk about that and drill down in detail here. So this might be a little longer report than usual, but please bear with me because I think it's going to be worth your while to absorb it all. So let's move on and take a look at the futures contracts first for the major equity indexes, and then we'll take a look at the market internals from there. First up, let's take a look at the NQ futures, the NASDAQ futures. Today were unchanged. So if you're a NASDAQ only trader today, you went home and you didn't get paid. That's what we always used to joke about when I was running a NASDAQ desk. If the market closes unchanged, you don't get paid. But there's a lot to be learned here from this chart. First of all, is we were in this multi-day range, just grinding around this plus 1/8 area. Had a little bit of a gap up today. As you can see, we expanded the range to the upside after the 10 o'clock data came out. That's when the market really started to roll to the upside. We went up to the plus 2/8 level at 38.28 and found significant resistance there. Market actually traded up there for quite a while before starting to roll over and come back to the downside, but we wound up closing unchanged on the day, leaving a very awkward looking wick above this trading range. So essentially this area right now that was traded by the bulls to the upside was rejected by sellers, and they couldn't hold price. The good news is that we're still above the 10 EMA, so we do remain short-term positive, but we've got what could be a very negative candle here with this long topping tail and a close that was actually below the open. So this is going to wind up being a camouflage sell signal, or a contra candle, if you will, to the downside. So just be aware of this. The other thing is the MACD is rolling over. We're losing momentum here as the market is just grinding and going nowhere. Key support is going to be the day's low, which coincides with the 10 EMA if that releases, then 37.50 to the downside. Obviously resistance is going to be the day's high, which is the plus 2/8 level at 38.28. Next we're going to take a look at the ES futures. Somewhat of a similar day. We gapped down a little bit more on the futures here. They closed the gap, rolled it up a little bit higher, but ultimately found resistance as the NASDAQ side did, roll to the downside, and actually made an outside day down. So we expanded the range that we were in to the upside, closed lower on the day. So this is an outside day down. We're 10 bars up now in the seeker exhaustion phase, but with today's low close didn't qualify for day 11, so we have another 3 days to print before we get that exhaustion warning. But this is still a very awkward and kind of clumsy looking candle on the chart. Good news is we didn't undercut the 10 EMA, so we remain short-term positive for now. But this is definitely a kind of a precarious looking candle. Volume was fairly low today. We're still in the beginning of the new option cycle, but Wednesday really needs to be a decent day where they don't give up any ground. And if we do wind up closing below the 10 EMA and below the 6/8 level, this pattern could be in some trouble. Take a look at the YM, which are the Dow futures, real quickly here. We're having trouble at the 8/8 level. Got up to there today, got rejected there, closed below the 10 EMA. I want to turn our attention now to the Russell, which is something that we don't spend a lot of time on, but we were up against this 8/8 level, pushed up above it, and had a very, very weak close. The Russell index today was by far the weakest index. The NQ was flat. The ES, representing the S&P 500, was down 0.5%, and the Russell futures were down a full percent on the day, just settling below the 10 EMA. Remember, just settling below the 10 EMA doesn't change the trend negative. We need to follow through, but what it needs to do so is actually in place, and this would be the first time below the 10 EMA since basically late May, early June. So this could be a pretty good turn. The other thing to note here is look at the high up here. We're up into the overbought territory. We got down to the 2/8 level, and now we got stuffed at the 8/8 level. So this does have the potential to be a lower high. Of course, we have to qualify that, and that remains to be seen. But this does have the potential to be a lower high, if in fact this 8/8 level proves to be the wall and true resistance. And while the equity markets were weak, the bond markets were strong, even in the face of what was described as a not very good auction from the Treasury today. The 4/8 level here was taken again by the TLT here. So this could be a bit more of a rotation here, and we definitely could see a return back up to the previous highs here if there's a rotation out of equities and into fixed income. So definitely keep an eye on this chart. Here's a look at the oil futures. The oil futures are important really because it's kind of an economic indicator, if you will. We roll back down to this 8/8 level. We're still holding above the 10 EMA, so we're still short-term positive for now, but definitely a pretty bearish candle there. On the other hand, we have kind of a split here in the commodities market because while oil was weak today, gold was strong. Actually made a new high settlement on the move. Made a new high in the move and a new high settlement, so that's definitely progress to the upside. So basically what we have here is still this flagpole to the upside, this little bit of a flag pattern. We haven't really cleared the flag yet because you can see that today's settlement was the top of the pole. So this definitely is still kind of a consolidation, just working off of this big range expansion to the upside. Key thing to take away though is these three candles, number 2, 3, and 4 here from the Seeker startup, are all holding on the north side of that 4/8 level. And note back here in May, that was resistance that it couldn't get above. So this could be an interesting development, and definitely don't take gold off the radar here on the long side. Kind of made the case for that last night, and I hope you take that to heart and definitely understand how money could be potentially rotating. I want to move on and talk about the market internally now. The market internally was extremely weak today. It was flipping around and very volatile today. At one point the advanced declines were plus 1,000 issues, and then they gave way, and what we wound up with at the end of the day was very negative internals. The ARMS index, or the TRIN index, closed at 2.25 today, which is a very high reading, just showing that there was a lot of selling today. That means there was a lot of volume happening on the bid side of the market that got that trend reading all the way up to 2.25. You can see what it did to our 10-day average. It really popped it to the upside here. So we had a pretty extreme move here that took us back to the midpoint between the oversold and overbought thresholds here. So this is a pretty notable move, and it just was evidence that there was some genuine selling today in the market. So we just talked about the advanced declines were plus 1,000 at one point during the day, and then really just deteriorated towards the end of the day. Wound up, even though the S&P side of the market was fairly weak, wound up minus about 800 issues. You can see we got a little bit of a rollover here. Now here's the cause for concern. Now while the Nasdaq itself, the NQ futures, were unchanged on the day, we were minus 1,100 issues on the advanced decline line. So what that did is it took a pretty good hit here to the cumulative advanced decline line. So we're actually starting to level off here, and this could be an important area here where if this turns into a lower high and this low gets taken out, that would be extremely bearish for the market. We have to take this one day at a time. It's going to take a while to get there, but if that does happen, that's going to be some really important internal evidence that the market is starting to deteriorate. Okay, now being objective traders, the one thing we have to do is give credit where credit is due, and certainly the broad market was relatively weak versus the NDX. So the NDX had relative strength today. You can see that in the NDX S&P cross. You can see this move back up towards range high. If we can take this out and not have the Russell deteriorate and fall apart, that would be a pretty positive development, where we're starting to see the Nasdaq start to reassert itself. maybe get the biotechs back in gear, see a continuation out of the semiconductors. But until we take out this previous high in our ratio chart, that's really just coffee table talk. So we'll have to see if we can get a new high recorded here, and this isn't just kind of a little bit of a relief bounce. All right, here's a look at the sectors ranked from best to worst. BTK was the top gun. There was a big news-related pop in one of the very heavily weighted index members. That was Vertex VRTX was up a ton, and that really colored the whole BTK. So let's just say that the BTK had a good day today, but let's just make sure it's not a one-hit wonder, not a Tommy two-tone. Let's just make sure this follows through to the upside here and can actually do something. Right now I would think that that's a little bit suspect, but I've been wrong before. Last laggard, the XAU, starting to roll back after being overbought. We talked about the XAU being a little bit overdone in the previous report, and certainly we were correct about that, and we're starting to roll back down here again. I think the real cause for concern, though, was the oil services index, the OSX, being so weak. It was down more than 2% today. We had a really nice short today in the OIH, which is an ETF that pretty much tracks the OSX. Definitely keep an eye on that. There's a lot of things going on there that could lead to some more potential trades to the downside that look really nice. XOI, which is a little more broader base, which includes more natural gas and whatnot, was fairly weak also. The airlines were weak as you would expect, and the transports were down almost 1% today, which is a problem. So we've got the transports really weak and the OSX weak, which is not what you want to see this late in the recovery process here. Remember, this has been a very protracted move to the upside here that really remains largely uncorrected, and you really need to see the oil services and the transports to continue to do the heavy lifting and to pick up the slack from the early cycle stuff like the BTK, the banks, and the semiconductors. First up, here's a look at the oil services, the OSX. You can see a really negative candle here. Covered a lot of range. We actually undercut the previous breakout. We did settle right in the area of the 10 EMA, so it's not a change in trend just yet, but if we do fall through below the 10 EMA, we will wind up being short-term negative here. MACD is still positive, but showing signs of fatigue and wanting to roll over. I would think we're probably going to wind up having a little bit more of a measuring day tomorrow than an immediate follow-through. But if we do have a follow-through to the downside, that will also indicate the loss of the 10 EMA and short-term trend going to negative, which would be a real loss. I want to look at the transports now. Transports were down about 0.8%, settling down below this 8-ace area. Remember, when we're up in here above 8-ace, we're in the overbought territory, so we do have the potential here for a double top 1 and 2. If we take out this previous low, that'll be the confirmed double top, and probably put the 0 line on the MACD in play. And I would think also the active static trend line in the 50-period moving average will be traded pretty quickly. Let's take a look at the airlines index now. Here's the XAL, looking kind of weak. We have a potential here for a lower high if we take out this low. Here's your high. Here's your retest of that high. And if we take out this low and lose the 50 DMA, that's going to be a confirmed lower high, and this is going to be a mess. One thing we don't have working for us on the short side, though, is we don't have the exhaustion count yet. We're still many days away from getting that 13 recorded on the Tradesight Seeker, but we definitely have some downside momentum potentially building up in this one. We'll talk about the BTK, which was real strong today. Got up to this 4-ace level, still hovering above the 10 EMA. This 4-ace level is going to be a big area. You know, the 0-ace, the 4-ace, and then the 8-ace are the big levels. Right now, this is really just a distribution candle where they opened it up. Remember, the cash charts don't show the gap, so basically opened near the high and settled at the close. You can see the downward action here. They very rarely reflect the true gap. Here's your open and here's your close. Failure at the 4-ace level. I just want to conclude with the XAU. XAU, we ran up against this 4/8 level at 100. A lot of range expansion to the upside here. Pretty short-term overbought. CCI got really high here on this push. You can see where it started this move. Got all the way up almost to 250, which is a pretty extreme move. Starting to reverse that now. This is an outside day down at the top of the range here, so this is definitely a very bearish candle. Keep in mind we do have this gap in here. It's also in the area of the 10 EMA, so I would think that's probably going to wind up being in play at some point, unless we have something funky and unfortunate happen in the Middle East where we have a kind of just an asset reallocation, but that remains to be seen. So anyway, running a little bit long tonight. I just wanted to talk about what's potentially happening out there, and I'm going to leave you with one more chart before we go, and then I'll leave you to hopefully have a great day on Wednesday. All right, folks, and we'll just leave with this chart. Here are the ES futures, just which represents the broad market. This is the monthly chart, just to get a little perspective here. So here's the market topping in 2007. Here's the market bottoming in 2009, and you can see how we had a little bit of bumps along the way here until we really got this trend going, and actually addressed the previous high. Once we've addressed the previous high here, especially since then, the market has been on a march here, which is a multi-year march that has gone uncorrected. There's a lot of statistics about how long the market can go before being corrected, but then you have to figure in all the extraneous circumstances like the Fed and everything else that's going on from the central banks around the world. But the bottom line is that we've essentially had a move from 2007 to 2014, which is nearly 7 years now, which has essentially gone uncorrected. And so the bulls have just been putting money into the market and really haven't been tested, and they have not been tested at all since the market broke out in any meaningful manner. So just something to keep in mind here as we're working through the rest of this week and next week. And the market usually does it when you least expect it. So whenever you're not expecting it, expect it. Not calling a top here. That remains to be seen. But if the market does start to fatigue here and start to roll over and show us some more negative internals, we're going to know what to do. All right, folks. Thanks for listening. This has been Rich for Tradesight.